Thursday, January 2nd, market analysis. Stan Ehrlich, good morning. About 9:48 California time. I always start out with the stock market indexes, usually the mini, and go to futures markets, rates, metals, meats, grains, energies, and others. Here we go. Now, you guys know that we had a bullish engulfing buy signal on December 20th. Market went right up for a couple of 2.5 days or so. Immediately afterwards, great. Plenty of elbow room to make some money. I'm not showing you all of the trades for the ER signal in this chart, but that's a fact. Now, we are in a situation where it has come all the way back down, and today is threatening to have a new low close from the top of the market back on the beginning of December, a month ago, when we had this downside breakout on December 18th that caused the oversold. Then we got our buy signal, which worked. So on a longer term basis, if you're holding a position because of the signal, not good. But again, my stops climb for long positions, of course, very, very quickly. And I don't generally allow a profitable trade to get to a loss. That's just not good, period. So is this going to hold or not? Well, the Santa Claus rally is not doing too good. We did take one profitable trade, but now we have, and I'll show you in a minute, two losing trades for the E-mini and the YM, I believe it was. So here we go. Santa Claus rally bought at 710, sorry, on December 20th, Friday, Monday, same time, Tuesday, same time. And that was a week ago. Or 1 and 2 and 3 trading days before Christmas. So the day after Christmas, all three were profitable. And then the market started to drop down some. 2 out of 3 were profitable on the close. But by the time we rolled into December 30th, Monday of this week, we have a loss. Now, we're getting out at 6:50 a.m. California time, and that happened this morning of our first position. Now, it doesn't have to be FIFO, first in, first out, which is what I'm using, but it balances out in the end. When you get out of all three, then you have an average profit or loss or whatever. So the first trade was a profit, but the other 2 trades are still on the books, and they are not doing very well. This is not automatic, so I have to pull a locator for the current tick down a little bit. So these 2 are currently on the books, and we'll get out of them. One of them tomorrow at 6:50, and the other one on Monday at 6:50 a.m. California time for the E-mini. So I need a rather nice rally to get above at least 59, let's call it 6,000. That will probably be enough momentum to turn at least, of course, the second trade profitable, and the third one would still be a loss. But then you've got several days, a few days worth of trading behind you and below you, and that would probably cause more of a rally. But the problem at the moment is that's not happening. We're seeing new lows now, and a challenge of the lowest lows since November 6th. Not what I was expecting. I was expecting the bullish engulfing ER buy signal on December 20th to produce a nice rally, and any minor downside correction would hold, and then we'd come up and make new highs for the whole damn trend, probably by now or in the next couple of days, the first week of January, which we're in. So if it starts to make a lower low than 58.63, and that's not very far away, it could drop all the way down to at least 57.97, which is not that much lower, but the momentum would be gaining, and that would be new lows since September if that didn't hold. And then we've got 55.80 to look forward to a potential bottom. I'm not bearish. I'm not bearish long term. I'm not bearish really intermediate term yet, but I can see how I would be forced to become if it started to make new lows below the late December lows, in this case, December 20th. Then I got to flip to being somewhat bearish. Right now, I think there's a decent chance that the market could stop and all the indexes basically apply, dipping down and start to turn around and start to make some bullish gains here. What about the daily data on the spider? Well, we have an outside down day at the moment, but it could turn into a bullish signal, or rather a bullish engulfing, if we simply close higher. So we need to come back up 3.5 points or more on the SPY. Or, not looking good, new lows and a bit further down would be likely. Spider, 5-minute chart, challenging the support, bottom of support area very accurately at the moment, but this is a little bit delayed data, so we know we've bounced in the E-mini, which is real time. So this looks like it's actually going to bottom out because I know what happened to the E-mini in the last 10, 15 minutes. This is 10 or 15 minutes old. About 15 minutes, yep. Now, the QQQ, a little bit delayed, near the low, and has already made a minor new low below 1220, the date. So if it stays here and doesn't rebound, it's probably going to go down a bit more. So this definitely looks a little bit more bearish than the spider and the E-mini. And here is the 5-minute chart. This has made a new low for about a month. Next, NASDAQ just barely hanging on, made a new low by a few ticks, but bounced right away so far. But this is going to be probably a new low close, since, late November. Not oversold yet. None of these are showing signs of turning up at the moment, but they do have potentials. But you got to start to see it move in the right direction before you become enamored and convinced that it's going to have some follow through on the bullish side. It ain't there yet. The 5-minute chart just crashed like the others into this minor new low. The YM is oversold and was a couple of days ago and does have a bullish or bearish engulfing. Now it's bearish. Earlier today, we did have a bullish engulfing, and it was green, and it looked like we were going to have a double bottom with both of them being green buy signals. Again, December 20th worked fairly well for a few days. So if we turn around and close higher on the day today, we will have a bullish engulfing. But right now, it's a bearish engulfing, and it's oversold. And it's testing the lowest lows for a month and a half or so. It's got to turn around in order to save its bullish potentials, but it doesn't appear that is happening. Here's a little bounce, and it just looks like it could drop off more. Now, that's our trade earlier this morning from about slightly after midnight, 12:10 a.m., and it made a little money and got stopped out at 4:45 a.m. this morning, quite a while ago, because at that point you created a bullish engulfing outside up day and oversold conditions, blah, 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 and it worked great. It didn't last very long, but there was some money to be made. Then we're getting out relatively close to the high of the rally also. Look how quickly our trailing yellow stop line went up and then got hit. So I'm glad that we're out of that. But on a longer term basis, doesn't look healthy at the moment. Russell, major historical support, the red zone, has held. We are currently down a squeak, but there is an outside trading range, and we were oversold within the allotted number of back days to get a signal. So all this has to do is move up a little tiny bit. It's down 1.2, which is very small, and it will turn green, and it will be an ER buy signal. which I would like to have, but I also want it to occur in the other indexes, which don't look particularly likely because they're down a lot more. Here's the Russell hanging in there much, much better. Maybe the other indexes are telling me the Russell is going to collapse here like the others have started to do a little bit. Don't know for sure. Could happen. Now, the bonds. We have a little bit lower current quote, down 6 ticks, but I'm still talking about a big, large 2-year bottom formation. We just can't continue to make any more lower lows, especially on a closing basis, because I've allowed for a little more time than I should have to begin with. I wanted it to bottom out in October, where it really was at the time, and I actually got a buy signal, which didn't work. Then we had a low, a little minor double bottom that worked fairly well, but the resistance level on the rally topping out December 6th stopped it, and it went all the way to where we were when we got a buy signal a few days ago. So this is the last chance, in my opinion, that that big formation is going to be potentially relevant. So I'm going to have to erase a lot of stuff if we start to make new lows. So I have got no choice to say, I sure hope it holds in here and starts to make highs above 1424. And then the real important breakout is starting to close above 120. Ultimately, this giant bottom for 2 years could drive it all the way up to 150 if it holds in this price range the last week or so. Notes, doing okay. We got the bottom of the market to the exact day on December 26th. No stop was hit. We've got the ER1 overnight to the current tick, and we got the ER3 overnight to the current tick, and both are green lines. Both are profitable. Not much, but green. I need to close. I want to close above yesterday's high. That'll help a lot and keep on going. Again, like bonds, if we can get over the high that was made on December 6th, then the upside objective in the bond market is going to look a lot more plausible. And it's all the way up on the 10-year notes. I'm sorry, did I say bonds? 10-year notes up to 126. Next, crude. Nice sharp rally. Making new highs now since early October. We haven't crossed the major bear trend line. We are significantly overbought today at 80. So at a resistance line, close to another resistance line, there's a chance that it's topping out very soon, right in this ballpark price level, right around where it is. But it hasn't started yet. But I think there's a good chance of that. Now, what happens if it comes down just a little bit to 71 or 2.3 lower and turns around and starts to go back up and make new highs again? That's going to be pointing toward, since September 10th, higher low, steady, a little higher low, a higher low, and then if it drops again and turns around and makes a new high, another probable higher low. That is definitely the underlying definition of an uptrend. But the higher highs are not quite as obvious and quite as profound as far as the amount of time it's developed is concerned. It's only been a month or two. But this is turning bullish. Now, overbought right now implies a little bit of a dip. Let's see what it does when it comes down mildly. And if it turns around and starts to head north, this could be a very bullish situation, but not quite yet. Same type of commentary on heating oil. So they're basically agreeing with each other. The low, then a higher low, a little higher, around the same, a little higher. Now, today, new highs for a couple of 3 months coming along, but overbought. So minor correction, and let's see if it can make new highs after that. I haven't got any signals, so I can't crow about that at the moment. The last one was the sell signal that worked okay, made some good money. Took a week or two, and I'm not sure about the scalp trades, so you can't see them very well on the daily data charts. On natural gas, we came down and basically closed that gap at today's low, almost bullseye. Now, here's a question. This kind of looks like the gap is closed, but is it really? Where do you measure the gap from? Historically, it's from the high of the day before it gaps up. So that would be about 3.454, I think is the exact tick. And it didn't get quite that low, but it did come down to the high of the day earlier, closing about half the gap and touching that little bit of support. So this is now an outside up day because apparently there was a very minor amount of trading yesterday on January 1st. News to me. Didn't think it was going to be trading on that day. Most of the markets didn't. So I'm liking what I'm seeing. New highs, overbought, resistance, pulled back, closed a gap or partially closed a gap, and starting to turn around again. Let's see what it can do on this next rally. We're not overbought at the moment. What about gold, silver, platinum, copper? Gold popping up. Now, you know, I've been talking about this head and shoulder top for a few weeks. This is not what it's supposed to be doing. 2 days ago, we were on the way down at a new low close for 4 days. But yesterday, that would be Tuesday, and today, Thursday, yesterday being New Year's Day, of course, we have strength and a new high for a week and a half. This head and shoulder top is not acting correctly. It's not damaging the pattern completely yet, but that's not normal. The move down on Monday and Tuesday should have followed through and tested the little bit of support right there and made new lows for about a month and a half and then come all the way down and keep going. So I got to watch this very carefully to see if this head and shoulder does still stay alive or is in the process of failing, which it is at the moment a little bit. Silver tested the neckline almost exactly, just a hair below it. Shoulda, woulda, coulda, broke out and didn't make new lows from a week and a half earlier. Held, popped back up above the neckline today. You're not supposed to do that. So it is showing some bullish indications also, like gold. Not enough to turn bullish, but certainly this is a violation of the original rules about how head and shoulders are supposed to act, particularly around the neckline. Starting to turn a little more friendly than I would like to have talked about. I thought it was going to be coming down all the way to 24.5 for the downside objective or more. And that's still possible, but this is not supposed to happen. So what happens if it stops on this rally right away and then crashes through the neckline again? Well, okay, the pattern's back in effect. But again, once you go below the neckline on these head and shoulder tops and bottoms, or above the neckline on a head and shoulder bottom, you're not supposed to cross it again. Next, we did get below yesterday a little bit, but it didn't close below the neckline on the platinum. Now, we got a new low today by a small amount, and it was a new low going all the way back to November of 23, over a year. That today's low is lower than everything for a full year on this continuation contract. But we're higher on the day now. So it bounced essentially off the neckline, not supposed to do that, and is now back above it again, not supposed to do that. And it damn near got oversold, not quite, but it actually made new lows for a very long period of time, and that is usually bearish. So all of a sudden, this looks like it's trying to turn back up. It is at the bottom of a support area also, right where the neckline is at the moment. I have to say, something bullish might be brewing. I just don't have enough evidence to stick my neck out on the bullish side of silver, gold, and platinum yet. Copper. Buy signal a few days ago did not work. We did go up just a little bit the next day, so that's not good enough. And then lower, and then a new low just before January 1st, which was a small amount of trading apparently. News to me. And today we have, because of the small trading, an outside up day, but I very, very, very much question the legitimacy because of the fact that yesterday was January 1st and the trading range was only a few ticks. So I don't think this outside trading range is relevant based on yesterday's date and the amount of trading. So we have a lower low by a smidgen, a few ticks, and we're lower on the day by a very small amount. We did break below support, period. We look like we're going to close below support, not good, and it looks like copper is going to slip some more. Despite the fact that it's oversold, that does allow me to say a small bounce back to resistance, which could be, back to 4.08-ish, might happen, and then down. But this is bearish. Beans, oil, meal, corn, wheat. Now, again, I'm going to start talking about bullish looking chart patterns. Beans, new highs, probably on a close. It's not up much at the moment. For a goodly month plus, since November, a month and a half. After making a new low for the whole trend for years and getting oversold. So this now could be a broad double bottom. The lows aren't that close, but they're close enough. I've seen double bottoms that were over a 6-month period like this: August, September, October, November, December, January. Actually, this was December 19th. Call it 5.5 months. That were a little more accurate as far as the price levels being about the same. Nevertheless, this is not too badly in new low ground. And here we are, coming up pretty good. I didn't catch the bottom with an ER buy signal, unfortunately, but the pattern is starting to develop back to a little bit on the bullish side. Where am I going to turn bullish emphatically? When it gets up to 1047 on a close or higher. I'm going to have to say similar things about soybean oil. Look at the support area here. Basically held, got broken for a week or two, oversold, came back again. No new lows, came back up to new highs, no new lows, new highs, and quite a bit of a new high. Although we got a sell signal on the high day. I love that part. And it has come down probably more than I originally thought. I'm pretty sure of that. But now we got a buy signal almost on the low day. It made a new low a couple days later. And this is part of the bottoming out process. So soybean oil punched up to a minor new high, but right now is just up a few ticks. Excuse me. It is an outside up day, bullish engulfing at the moment, and it has to stay higher on the day to have a bullish engulfing. It's not an ER buy signal because we weren't oversold within the allotted previous days. So this is very close to a bullish signal, but not, by strict rules, code, giving me what I needed. But I'm liking what I'm seeing. Not a lot, but at least enough to say something about it. Here we go. Soybean meal has done a lot here. It's broken a major bear trend line again. It is now punched into new high ground since the middle of October again. And finally, it got overbought today in a resistance area right at the bottom of it. So it probably will turn back down soon from about here. And we're now only 4 cents higher at the moment on the day, or $4.40, $4. And it could flip. We're still near the high. That's good. I think this right in here is where it might stop and have a correction. To where? Maybe this line is going to hang on and it's going to make new highs after that and get out of the overbought condition, which is barely in. We just got a tiny bit above 75, but hey, the rules are the rules. Last time it was above 75, it took it 3 or 4 days to top out, and it sure as heck did. Then we have another occasional alert on that, and we got a few days down. And then we have a 1-day overbought, and that was the exact rally high day. So you see, I have learned over 50 years plus that our oscillators can be very helpful in getting into conditions where markets like to turn around up and down. They don't get as accurate as I'd like, but they come within usually a few days. Sometimes it takes a week or two. So the accuracy of the timing is not great, but it is a warning, excuse me, that the market is likely to turn around, up or down. Oversold turns up, overbought turns back down. Next, we had a sell signal in corn yesterday, day before yesterday, excuse me. Didn't work. Yesterday we made a new high, and that means the signal did not catch the top of the move. Today we're going up a little bit more, but we're overbought now 3 days in a row. Sorry about my cough. And I am expecting it to roll over and start to slip back down, probably to about 444. Now, so far, the shoulder, July 12th, this summer, the head of the formation, basically August 27th, this late summer, and the last shoulder low, October 17th, with a buy signal on the very bottom of the shoulder, has produced a neckline that we broke once and fell back below it, but we've now been above that line on an all-day basis for 1 day, 2 days, 3, 4, 5, 6 days, and climbing still. So I don't like the overbought, so I'm looking for a little bit of a dip. But back to the neckline would be out of a textbook classic, 447, and then up and a new high. How high shall it go with the computer with the head and shoulder bottom? 494 and 494, give or take a penny or something, is my minimum upside objective on this. So it's only got 35 cents more. $35 more, excuse me. Next, wheat. Climbing some lately, but look, you've got that double bottom potential like soybeans. And it crossed a major bear trend line also, and for the last couple of days, it's stayed above the line, including a touch of the line at the low of the day today, classic textbook retracement to a trend line. This is not a neckline. It's simply a trend line. It could develop a big, broad double bottom, and now I'm going to put my marker for the low for the double bottom over here because that low didn't hold, but this low is not that much lower. And on double bottoms, the timing has never forecasted. It only happens when it happens. Head and shoulders, you've got a timing indicator for the last shoulder rally high or the break low for head and shoulder bottom. But on double bottoms, it could happen in a matter of a week or two or a couple of months or even longer term. So this could be it. It's breaking trend lines. It's starting to make some minor new highs. All the other grains are showing some sort of evidence that they're starting to turn a little bit more bullish. Cattle, I'm sorry, we did corn. Cattle shot through the roof today, made a new high for many months, trying to close above the previous rally high, right about there right now. So I want it to close above the previous top. You know what I've said innumerable times. If you see new highs for a significant amount of time period and the closing price is at or below the previous rally high, which this is right now where it is, that could be a sign of a lack of strength, lack of follow through, and we're about to see a big dip. And if we do see a dip, it'll probably come down to something like 189, maybe 187. And then we'll see what happens. Or, because we're not overbought, although look at this, we're very, very close. The RSI got as high today as 74.79, real close to 75. Last time it was up to 75, it had a bearish engulfing sell signal smack on top of the rally high and came down for a few days very nicely. So this is very touchy here, whether it can maintain a strong enough closing price or not. Next, new lows recently for hogs, doing exactly the opposite of cattle. So oversold in a support area. A little low today, about the same as yesterday's low. It looks like it could be exact 8,000 compared to 8,000. That's exact. So the low 2 days in a row today and yesterday are exactly the same, with a lot of psychological support, which is the 0.000. Any number that ends in lots of zeros or a big fat 50, for example, that's basically psychological support and resistance, not what technicians would tend to use very often to talk about as support, but I've seen it happen too frequently to pass it up You don't see it happen often. Today, so far, pretty good. So what you would want to do before today started, of course, is consider being a buyer at 80.01, a tick or two above the previous oversold condition low. And if there were other reasons to believe it could bottom out at that level like it did yesterday, then, maybe you're a touch more aggressive. What are we doing here? This is the only stock that I've been following for maybe a month now. I said because of the head and shoulder top, and I'm going to zoom in, so to speak. Shoulder here. The head is a little double right there, got overbought. And the last shoulder is a simple rally and all in one day. It made the rally high, shoulder high, December 18th, dropped into new lows for a couple of weeks, and then went below the neckline right there, 92.16. Made new lows for a couple of weeks on the way down and just kept going. That is the classic breakout of a head and shoulder top. It's a small pattern, but it's there. And the minimum downside objective of 82.40. We have made yesterday new low close to 84.76. Today it's kind of bouncing just a little, not oversold. I think it's going to get to my objective 82.40, but that could be, in a very longer term basis, a nice buying opportunity. This has bottomed out over a 2-year time frame and crossed all of the important bear trend lines during that year and a half, 2 years, and made new highs for extended couple of weeks, a couple of times. I like the long-term trend still being up. So once this little bearish formation finishes, I think maybe it'll turn around and start to head north a lot. Now, E-mini, again, bouncing slightly. Yeah, not much. We're right here right now, so I can move my little Santa Claus rally markers up a slight bit to get to the current quote. But they're still losing. This one made money. This one's at risk, and this one's at risk to be losses. If it doesn't come up quite a bit by tomorrow at 9:50, then we'll offset the one we bought on December 23rd. You guys have a great day and profitable trading to you. Hope you had a great holiday.